Hey guys, it's Adrian here, the Canadian in a t-shirt, and today I'll be breaking down why you should start your own business in Canada. Whether you just want to start a side business, you want to be fully employed, or you want to set up your own corporation, I'll go over all the benefits of running a Canadian business. I'll be focusing on the financial and tax benefits of being a business owner, but I'll also touch on the personal and non-monetary advantages as well. Right off the bat, I want to tell you that anybody can start a business. You do not have to be a genius inventor, and you don't have to revolutionize an industry, so don't feel intimidated if you aren't Steve Jobs or Bill Gates. As long as you have a set of skills or knowledge that provides value to other people, you can run a business. In fact, the work you're doing right now at your full-time job could in itself become a business. I'll get back to this point later in the video, since there might be some conflicts of interest depending on your job, but the point I want to make is this. You do not have to be exceptional or brilliant to start a business and make money. You just have to be disciplined, focused, and willing to make sacrifices in the short term to enjoy the huge benefits in the long term. Before we get to the fun stuff, make sure you check out my previous video on how taxes work in Canada, where I break down what are tax brackets, marginal tax rates, and tax deductions. And I go over why business income is taxed less than regular employment income. So click the pop-up at the top right to watch that video first, and then come back to this video. As I talked about in my tax video, the vast majority of Canadians earn all of their money from their employment income, so a full-time or part-time job. And that's the expected path for most people. You go to school, you learn skills, then you go and get a job where you get to meet new people, develop new skills, and enjoy benefits like paid vacation and dental insurance. And as long as you do your job well, you can rely on a steady paycheck every 2 weeks. And if you continue to do your job well, you can expect your salary to increase a little bit every year, at least to match inflation. But here are some problems. First of all, you are always trading time for money. That basically means if you don't work, you don't get paid. So if you want to keep earning money, you have to keep working year after year. And hopefully you'll have enough money saved up so that one day you can retire. And if you want to earn more money, you have two options. Either get a pay raise or increase the number of hours you work. But there's a limit on both of these. There's always going to be a ceiling or a maximum salary that you can reach, and you're also limited on time since there are only 24 hours in a day. With any job, there is a ceiling on the income that you can earn. Even if you are the best employee ever and you get promoted every single year, you're always going to have a boss above you, and you can't earn more money than your boss. Even if you get to the very top of the corporate ladder and you become the CEO after 40 years, you're still at the mercy of the investors and the board of directors. They decide how much money you earn. But if you start your own business, there is no limit on how much you can earn. As long as you manage your business well and you keep expanding, your business income can grow year after year, and there's no stopping it. With a job, you're trading your time for money. If you want to increase your income, you can work more hours, but there are only 24 hours in a day. Plus, people have limits. Everyone needs time to sleep, eat, and enjoy life with loved ones. But with a job, you don't get paid for that. You only get paid for the time you work. That's why I don't want you to rely entirely on your job for income. You can earn passive income through investments and running a business. With passive income, you are literally making money in your sleep. Of course, it doesn't start as passive. It takes a ton of work and sacrifice to get a business running. But eventually, you'll have enough systems in place so that your business can run on its own and earn you money even when you're not working. And eventually, you can get to the point where your passive income exceeds your expenses. Then, you can literally sit on a beach all day and your investments and your business can pay for everything. That's financial freedom. At that point, you can choose to retire or keep working. It's totally up to you. As Warren Buffett famously said, if you don't find a way to make money in your sleep, you will work until you die. That's why I urge you not to rely solely on your job for money. Everybody should grow investments, and if you can, build a side business too. It's so important to diversify your sources of income. That's the key to wealth and financial freedom. That leads us to the second benefit of running a business: ownership and equity. When you have a full-time job, you're not working to make yourself rich, you're working to make the company rich. All of the hard work and effort and creativity that you pour into your job, you don't get to reap those rewards. You just get a salary. That was the deal. Instead, your boss and their boss and the CEO and the investors, they're the ones that benefit the most from your hard work. But when you run a business, you are your own boss, and so you get to reap the rewards of all that effort. And there is nothing more rewarding and fulfilling than that. Don't get me wrong, you should absolutely take pride in the work that you do. I've loved almost every job that I've had, and I'm incredibly proud of the work that I did. But let's face it, I don't have ownership of any of it. None of that work belongs to me, and as soon as you leave, that's it. Sure, you'll get a pat on the back for your contributions, and you might even get a bonus, but that's a one-time thing. there's usually no long-term benefit of all of the work that you poured into the company. But if you run your own business, then you are actually building equity in your business. When you work hard, your business earns more money, and your business is worth more money, and that money belongs to you. Your business is growing in value every year, and so your business is an investment. Your business can be your retirement fund, or your business can be your inheritance that you pass down to your children. And maybe one day you decide that you're done, and you can choose to sell your business. All of your clients, your products, your services, your operations, that's all worth a lot of money. So if you don't want to be part of the business anymore, you can sell the whole thing. This can give you a huge return on your investment compared to the amount of money that you put into the business. And this sale can be very tax efficient. This brings us to one of the biggest benefits of running a business: tax efficiency. In Canada, different types of income are taxed differently. In fact, the worst kind of income from a tax standpoint is employment income. The money you make from your job is taxed more heavily than the money you make from investments or from a business. And here's why. When you have a salary, the very first thing that happens to your money is you get taxed. Before you can even think about paying your bills or investing, you have to pay taxes, and you have no choice on the matter. Those taxes are automatically taken off of each paycheck before that money ever gets into your hands. I always say, it's not about how much money you make, it's about how much money you keep. But the government doesn't see it that way. If you make a large salary of $100,000 a year, but you spend $60,000 a year on rent, car payments, and other expenses, you know that you've only really made a net income of $40,000. That's how much money you actually get to keep in your wallet. But the government doesn't tax you on this net income of $40,000. They tax you on the full $100,000 salary. All those expenses are just money down the drain. They give you no tax benefit. But with business income, it's different. When you run a business, you don't get taxed on the full gross income, you only get taxed on the net income. So all the expenses that you have to pay to run your business get deducted from your taxable income, and so you only get taxed on the net income or profit. This is huge, and it can save you tens of thousands of dollars every year in taxes. I'll be making a whole video on business expenses and how to claim them, but some common expenses that you can deduct from your business income include fuel costs, rent, mortgage interests, phone bills, car insurance, legal fees, and parking. You'll notice that a lot of these expenses are things that everybody spends money on. But if you only have a full-time job, you don't get any benefit from these. It's just money down the drain. But if you have a side business, you can claim that these expenses are necessary for your business to operate, and so you can claim these expenses as tax deductions. Let's look at an example. Let's say you have a great job with a really high salary of $200,000 a year in Ontario. With that salary, you're in one of the highest tax brackets with a marginal tax rate of 48.29%. That means that if you got a bonus of $1,000, you'd have to pay 48.29% of that additional income in taxes. So almost half of your bonus is already gone. But that's just for new income. Your whole $200,000 salary is taxed based on increasing tax brackets. So overall, with this salary, you'll be paying about $69,000 in taxes. That's huge, but it doesn't end there. Let's say to perform this job, you're paying $50,000 a year in expenses like your phone bill, gasoline, car payments, etc. The bad news is that this $50,000 expense does not help you at all. You are still taxed at your full salary of $200,000, even though you have a net income of only $150,000. Instead, what if we ran a business and made the exact same amount of money? So in our business, we made $200,000 in revenue and we had the exact same $50,000 in operating expenses. In a business, these expenses do help us. They reduce our taxable income to only $150,000. This is the amount we get taxed on. Even though we made $200,000, we are only taxed as if we made $150,000. This drops us down to a lower tax bracket with a marginal rate of only 43.41%, and our total tax bill will now be about $45,000. Because of business expenses, we were able to save $24,000 in taxes for making the same amount of money. This tax bill can be reduced even further if you decide to incorporate your business. We'll get to that later. With business income, you can significantly reduce your tax bill by claiming expenses, but you also get the benefit of time on your side. Remember, when you have a job, you get taxed immediately from each paycheck. That money is gone. You can't use it or invest it. Sure, you can claim RRSP deductions and tax credits and hopefully get some of that money back in the tax refund, but you only get that money back next year when you file your taxes. So you've basically given the government an interest-free loan with your money for a whole year. But with business income, you do not pay taxes right away. When you earn $1,000 from a client, you keep that $1,000. It's yours. Sure, you will have to pay taxes on that income, but those taxes are only due next year when you file your taxes. That means that you have a whole year to use that full pre-tax income. You can invest that money, buy new equipment, hire employees, or store that money in a savings account, and hopefully, by the time taxes are due a year from now, that money has grown. Now, the government has given you an interest-free loan for the year. Note that in some cases, you might have to make quarterly tax installments. I'll cover that in a later video. But even then, you still have the benefit of 3 months to use that money before taxes are due. This is a huge advantage. When you have a job, you pay taxes first, and then whatever's left over, you can spend on expenses or investments. With a business, it's the other way around. You can invest first, pay expenses, and then pay taxes later on. Having a business gives you total control over your money and your time. Obviously, when you run a business, you are the boss, and you call the shots. You can choose who you want to hire, what projects you want to work on, which clients to work with. It's your company and your decision. But you can also control the timing of revenue and expenses to lower your tax bill. Check out my video on year-end tax tips to see how you can time investment income between December and January to save money on taxes. You can do the same thing with business income. Let's say that your business is ready to launch a new product, but you've already made a lot of money this year and you're expecting a huge tax bill. If you launch that product in December, all that revenue will increase your taxable income for this year, and those taxes will be due in a few short months. Instead, you can choose to delay that launch until January. That gives you a whole other year before you have to worry about those taxes. Likewise, if you know that you have to spend a lot of money on new equipment, you can choose to buy it in December to lower your immediate tax bill. When you work a job, you don't have this control. You don't get to choose when you get a pay raise or a bonus. It might be more advantageous to receive a big bonus in January instead of December, but that's not up to you. Another huge benefit of running a business is splitting income with family members. As a business owner, you can pay your spouse, your siblings, even your children to work for you, either as employees or contractors. As long as you're paying them a reasonable wage and they are actually performing work that helps your business earn money. You can't just pay your kids a salary for doing chores. That's cheating the system and you'll get caught. But splitting your income among your family can save you a ton of money in taxes. Let's look at a quick example. If you pay yourself a salary of $100,000 in Ontario, you're in a high tax bracket and you'll pay about $23,500 in taxes. Instead, you can split that same money between you and your spouse. You can hire your spouse and you each get a salary of $50,000. Both of you are in a much lower tax bracket and you'll each pay about $7,600 in taxes. So now the total tax bill for your family is only $15,200. You can keep the same $100,000 in the family, but you've just saved over $8,000 in taxes. There's a lot to talk about with family income splitting, and I'll be making a whole video on this, but it can be a huge benefit of running a business, especially if you incorporate. Incorporating a business is a huge topic on its own. I'll be making several videos on the different types of businesses and the benefits of incorporating, but I'll give you guys a quick summary right now. For most people, when they start a business, it will be a sole proprietorship. This is the simplest type of business, where you are the boss and you are the business. Even if you hire employees, the business is still you. All of your business income, the net income after expenses, will be taxed under your name. Eventually, you can choose to incorporate your business. Now, your business is a corporation, and this is a separate legal entity. You and the business are separate entities. You still own the business, but your money and your income will be taxed totally separate from the corporation. This gives you two main benefits. First of all, it gives you liability protection. If your corporation gets sued or goes bankrupt, generally speaking, you as a person will be safe, and your assets will be untouched. With a sole proprietorship though, you are the business, so if your business gets sued, you get sued. And you could potentially lose your personal assets like your house, your car, your savings, even if they had nothing to do with the business. The second main benefit of a corporation is the lower corporate tax rates. This is huge, especially if you're considered a small business. In Ontario, for example, if your corporation makes less than $500,000 a year, your net business income will only get taxed at 12.2%. To really appreciate those tax savings, let's go back to our previous example. Remember, we compared an employee and a business, both making $200,000 a year. The employee was taxed on the full $200,000. They were at a high tax bracket with a marginal tax rate of 48.29% and a total tax bill of $69,000. The business owner, as a sole proprietorship, was able to claim $50,000 in expenses, so they were only taxed on their net income of $150,000. That brought them down to a lower tax bracket with a marginal tax rate of 43.41% and a total tax bill of $45,000. That's already huge savings, but what if our business was incorporated? We have the same revenue, same expenses, and the same net income of $150,000, but we get to take advantage of the lower corporate tax rate, and since we're considered a small business, we only pay 12.2% in taxes. So our corporation only owes $18,300 in taxes. That's incredible. This is a very simplified example. I just wanted to highlight the benefits of incorporating, but there's a lot more to consider. Remember, all this money belongs to the corporation, not to you. If you want to spend this money, the corporation will have to pay you a salary or dividends, and those will get taxed. Also, it can cost thousands of dollars to set up a corporation and to file corporate taxes every year, so a corporation is not always the best option, especially if your business is just getting started. Again, I'll go over all these details in a later video in my business series. You can see just how many benefits there are to running a business in Canada, but there are a few issues and misconceptions that I want to point out. First of all, I know it may seem like I'm bashing the idea of working a full-time job, but I promise you I'm not. I'm very fortunate that I've loved every job I've worked at, and I don't regret any of my time as an employee. Working a regular job is a great way to develop new skills, meet interesting people, make connections, and really discover what you love to do. I just want to make sure that you aren't relying entirely on your job to survive. That's why it's so important to diversify your income by investing, and if you can, by starting a side business. And that's how it should start, as a side business. Please, do not quit your job out of the blue and decide that today you're going to start a business. That's crazy. Start off as a side business while you're working a full-time job. It's going to be hard. You're going to have to make a lot of sacrifices. You're going to have to work evenings, late nights, and weekends when everyone else just wants to relax. But at least you will still have the stable income from your job to get you through. That's what I've always done. Throughout my career, I've always had one or two businesses on the side. My full-time job was enough to sustain me, but my side businesses allowed me to pay off my student debt and invest in real estate and the stock market. I make these sacrifices today to reap the rewards years down the line. And of course, everyone's situation is different. I have the advantage of being young and independent. If you have children or a family depending on you, obviously that will be your priority, and running a side business might not be feasible. Also, manage your expectations. You will not be making money right away. In fact, most businesses aren't even profitable for the first year or two. But even if your business doesn't make a profit, it still gives you tax benefits. As an example, let's look at my YouTube channel, which is a business. I didn't make a single dollar from YouTube for the first 8 months. So when I filed my taxes in 2019, I reported $0 in business income. But I still had business expenses. I had to buy a camera, a microphone, editing software, and those are business operating expenses, which reduced my taxable income. Since my business income was $0, I had a net loss. And I was able to use this net loss to reduce my taxable income from my full-time job. And so when I filed my taxes, I received a tax refund. So even if your business isn't making much money, you can still get the tax benefits of deducting expenses. But watch out, you cannot make a fake business just to reduce your tax bill. In order to claim business expenses, it has to be an actual business with a reasonable expectation to earn a profit. As you can tell, I love old video games, but that's not a business expense, that's just a hobby. But if I made a YouTube channel talking about video games, then yes, I could claim those as an expense, as long as I'm trying to earn a profit. So guys, I encourage you all to think about what skills and knowledge you have that could provide value to someone else. And that service could be the foundation of your very own business. And these can be skills that you developed in school or even at your current job, but be careful for conflicts of interest. Depending on your job and employment agreement, there might be a non-compete clause. That basically means that you can't just quit your job and start a business which directly competes with your old employer. In my YouTube example, there was no possible conflict of interest. I worked as a software engineer while I started this YouTube channel, and these two jobs are totally unrelated. But let's say I was a carpenter working at a renovation company, and one day I decided, hey, I'm doing most of the work and I can find my own clients. I don't need this job, and I can make a lot more money as an independent contractor. That's starting a business. But if I signed a non-compete agreement when I was hired, I might be in trouble, so keep that in mind. So there you have it, guys. Those are some of the reasons why you should start your own business in Canada. Unlike a regular job, your business income has no limits, and you can build passive income and equity in your business, giving you true financial freedom. With running a business, you can take advantage of huge tax benefits, including deducting business expenses, investing with pre-tax dollars, controlling the timing of revenue and expenses, splitting income with family members, and incorporating to lower your tax rate. Absolutely anyone can start their own business. You don't want to rely solely on your full-time job to support you through life, so please build your investment income and consider starting a side business as well. This is the first video in my Canadian business series, so stay tuned for more videos on how to actually start a business in Canada, the different types of business structures, how to file business taxes, and more. Thanks for watching, guys, and be sure to like, comment, and subscribe if you found this video helpful. Every thumbs up and comment really does help me build this channel on YouTube, and hit that bell icon to be notified of my new videos. And if you'd like to follow me on Instagram or Facebook at Canadian T-shirt, click the links in the box below or click the links on my homepage. Thanks everyone, and I'll see you guys on the next episode of the Canadian in a T-shirt. Bye guys.